It's your report card on how you're paying your bills. However, if you've noticed your credit has dipped and your score is lower than you ever imagined it being, life does happen. So keep in mind that your credit is a temporary snapshot. It can change and it can also go from being high to low and vice versa, low to high.
Hello, and welcome to the DirectLine podcast from Lighthouse Cove, where we explore ideas, experiences, and conversations shaping the future of the IDD profession. I'm Bethany Toledo McCrae, Executive Director of Lighthouse Cove, and your host today. I'm so excited to be joined by Suzanna Humbert from First Financial Bank. Suzanna is with us for part 2 of our financial fitness series. Welcome, Suzanna.
Hello, everyone. I'm so happy to be back with you today. We're going to talk about credit, my favorite topic. If you guys tuned in last month, I told you I was so excited to get to credit today. So I cannot wait for us to dive in here shortly, Bethany, into credit scores, decoding credit scores.
So, Susanna, for those of you that weren't able to tune in to the first episode and they have to go back and listen to it or watch it, tell us a little bit about yourself.
So I'm Suzanna Humbert. I'm your work-life specialist. So what does that mean? If you're listening to this, you have access to something called work life. So our goal at First Financial is to help you thrive in work and in life. And many times our finances can be something that keeps us up at night, that stresses us out, that we take to work with us. You know what? I don't want to be thinking about my finances when I'm at work, especially with the important work that you do. I want to help bring solutions to you. So through First Financial, we have this work life program where we can help you build credit, debt management, budget and save, buy a home, whatever your financial goals are. We just want to get you closer there and make it less overwhelming for you to reach those goals.
Well, we are so excited to have you back with us again today. And so, for people that, again, haven't had a chance to catch the
Mhm.
first episode of our financial fitness podcast, what did we cover during that first episode?
So we talked about budgeting and saving. So you've got to go back and listen because this is real life. And even though I do this for a living, does not mean that budgeting comes easy to me because it doesn't. Budgeting is definitely a skill and you need help sometimes. So the budgeting just breaks down ways that you can start budgeting today and start utilizing little tips to help you save money and make your money last a little bit longer. And in that last episode, I actually gave Bethany a homework assignment and it was to see how much she spent on going out to eat, and she thought she averaged around 150 when she does go out for lunches. So Bethany, when you did your homework, what did you realize when you kind of did a deep dive into your budget? Is that accurate, what you told us last time?
So I did do my homework. I downloaded, 3 months worth of bank statements, looked at credit card receipts, and I was pretty spot on with my out to eat for lunch. Again, it kind of cheats a little bit because I do work from home a lot. And when I am in the office, it's usually when my full team's there and we have such a jam-packed agenda, everyone packs their lunch. So I was
Okay.
pretty good with that. But it did actually bring to light another area where I need to get better at budgeting, and that is my shopping habit that I have. I've had some business trips over the last couple of months, and girls got to have new clothes sometimes. When they're going to a new place, and yeah, I realized that. I need to pay a little closer attention. I also have a habit of shopping kind of at the end of the day. So, like, I'll get done with my work day and I'll run to the store, but I'll be getting tired and I don't want to
Mhm.
hassle with trying on clothes. So sometimes I'll overbuy. Like, maybe I'll even buy two of the same thing, but in two different sizes
Mhm.
because, like, different sizes, different brands fit differently and all of that. And I actually have a bag sitting by my door right now that needs to be returned. And when I looked, and I'm not gonna lie, I really did my homework last minute. So I was looking at it last night. I was like, "Oh my goodness,
Oh,
I didn't know we I spent that much money at Marshall's," and like, "Well, yeah, I did, but it's because I have to
yeah.
take back half of the stuff that I bought still." So yeah, it was really eye-opening.
Well, that's what the budget's for. So again, like we're talking about credit today, but you guys, budgeting is so important. When you think about financial planning, it's a fancy word for budgeting. So I think that's why we started our series off with budgeting, but it is eye-opening. So maybe I should have challenged you the shopping instead of going out to eat. But I'm a shopper too. I'm with you on that. But make sure you take those things back. And you know what the good thing is? You can put that money back into the budget and reallocate. So maybe you can reallocate to a savings or somewhere else. So I know you do the zero-based budget. So I know you're going to put that money back into your budget and put it to good use. But I think we all can relate to exactly what you just shared. So thank you, Bethany, for doing your homework and sharing that with our listeners.
Yes. I also do we have time for a story because I did learn something else by taking a look at our budget.
Oh, we love stories on this podcast. So please share.
Okay, so you just mentioned it, so it jogged my memory. I do what is called a zero based budget, which means that when I look at my budget, I look at what's coming in, my paychecks, I look at my expenses, and the bottom line is always zero. That money is
Mhm.
always spent, and I try to like kind of spend it before it even comes in. And so my husband and I both have access to the shared spreadsheet where we have all of our budget stuff, and we each have a discretionary fund as line items. So he has his own discretionary fund. I have mine. We can't judge each other for what we spend our discretionary money on. And I think it was about a week or so ago, my husband said, I'm going to spend my next month's discretionary fund on X. And I was like, oh, okay. And then like a week later, I was doing the budget and we hadn't even gotten to the next month yet. But that line item was zero. So he had went in and updated it. And I remember asking him, like, oh, okay, so you took that money out of the bank. And he was like, no, he was like, but I know I'm spending it on, so I took it out of the budget. And I was like, you can't do that because until you physically take it out of the accounts, if you zero that out and then I reallocate, because you know how budgets work, you kind of estimate what your bills are, what your expenses are. And, that kind of, that might be more or less than what you budget. So, when I redo our budget, every week or so, I look at it and whatever money's left in that, in the bottom line, I take it and put it somewhere else in savings or reallocate it, like you were just saying. And so I had already reallocated his discretionary fund for the month.
Oh,
Now I did
no.
fix it and he got it back, but he learned a valuable lesson.
Yes, he did. Never do that again. Never do that again. So I think he learned now what to do because you can't put that money back in the budget. It's going to go towards something else. That could go in your discretionary fund, Bethany. That's where mine would go. It's like,
Yeah.
I'm gonna put a little bit extra in my fund this month. But thank you again. And I just love the eye-opening stories. Mine was how much I spent on Starbucks. So now I have a plan around that. So yeah, I put a little budget around my coffee intake. It's probably healthier for me to do that as well. But no, thank you for sharing that. And so through this credit class too, I'm sure we'll have stories to share, but you're going to learn a lot no matter where you are with your credit. You will definitely learn something new. And so before we dive into the topic, let's talk a little bit about First Financial. Who are we? And why do we have this amazing program? So First Financial Bank has been around for over 160 years. We serve Ohio, Illinois, Kentucky, and Michigan. If you want to find out more information, you can read all these bullet points or you can go to bankatfirst.com to learn more about First Financial Bank. So today we're going to talk about credit scores. So no matter where you are with your credit, you could be like, I have great credit. I feel confident. Or maybe you're in a place where, you know what? I've had life happen. I need some help there. Or maybe in the middle of the road, like, you know what? My credit's okay. It could use a little bit of improvement. Who doesn't want to have a little bit of improvement with their credit, right? So today's class is going to cover some key points to help you achieve a healthy credit score. So, what is a credit score? So, let's go back to our college days, our days in school when we got a report card. So, basically, your credit score is a three-digit number, and it's your report card on how you're paying your bills. However, if you've noticed your credit has dipped and your score's lower than you ever imagined it being, life does happen. So keep in mind that your credit is a temporary snapshot. It can change and it can also go from being high to low and vice versa, low to high. So that's what a credit score is. It can change. And believe it or not, you do have more power over that than you think. And you're going to learn some tips today to help you take control of your credit score. So what you're going to learn today, you're going to learn how credit scores work, where to find your credit score, establishing and improving your score, and how to protect yourself from frauds. We're going to cover quite a bit, so make sure you have a pen and paper ready, and let's dive in. How credit scores work. So credit score ranges, your score ranges from 300 to 850. So if you are at 850, you are showing off out there because that is the top of the mountain. And I will tell you, being in the financial industry for over 20 years, I've only seen an 850 maybe twice. So if you are there, applause to you. That's amazing. But you are showing off a little bit because anyone that's around a 750 or 760 and above, you're going to get the best interest rates out there. You're never going to have a problem probably getting a loan and getting a good rate. You are doing very, very well. But if that 300 range, don't give up. We have helped clients. I have an amazing colleague named Linda Fitzgerald, and her, myself and her, we go out in the community and we've helped turn scores around from 500 to 740. It can be done. We have great tools and resources to help you get there. So if you are in that 300 to 579, don't feel like that you're permanent. It's not. You can absolutely increase your score. It's going to take some work. It's not going to happen overnight. But if it is a goal of yours, you're stick to it. You have a partner out there to help you with First Financial to help you get there. Normally, if you're around a 660 or 670, you'll be able to walk into a bank and probably get a credit card or probably get a loan. So you're in a in a decent range there. And again, anything at that 740 and above, you're going to be very good and exceptional. So just think about yourself as you're listening to this. Where are you now, and where do you want to be? Right, and then feel free to reach out and listen and continue listening to today's class, and we'll get you there.
So, Susanna, how can we check our credit score and what really impacts our credit score?
Those are great questions. So there's several ways you can check your credit. So I have to ask you, Bethany, how do you currently check your score personally?
So, I have an app called Credit Karma, and that's what I
Mhm.
use to check my credit score and just to look and make sure stuff is accurate.
I love that. So Credit Karma shows you two credit reports. So there's actually three credit reports, which we'll probably see on the next slide here, but it's TransUnion, Experian, and Equifax. So when you're going on Credit Karma, there is going to show you two of the three scores. But still, that's better than not showing any, right? So you're going to see those scores. But the scoring information they're giving you is called your Vantage score. So just keep in mind when you see that score, if you go to apply for a loan at a bank, more than likely they're going to have a different score than what your Credit Karma is giving you, than what your Vantage score is. So if you're using a free app like Credit Karma and similar apps out there, they do normally share what's called your Vantage score. Why does the Vantage score exist? Just to confuse us, right? So the reason it's there is when you think of TransUnion, Equifax, and Experian, every time that someone pulled credit, they had to pay a licensing fee to FICO. So they decided to play nicely in the sandbox together and create their own scoring system called Vantage. The problem with that is they use different factors to get that scoring information, and it's not what FICO uses. So guess what? Lenders are going to always use FICO. FICO stands for Fair Isaac Company. They're the ones that created the whole technology to give you, I call them the OGs, to give them your credit score. And that's the only one that lenders go by, not your Vantage scores. The Vantage can be very confusing because you can go on Credit Karma and think your score is a 620, when in reality, it could be 580. We have seen where it's 20, 50, even up to 100 points different, and it can be for or against you. So what do you do with your question, Bethany? Where do we go? You can literally go to Experian.com and get your Experian score for free. You can go to Equifax and TransUnion. Some of them might charge a fee, and if you want to pull all three, there might be a fee of around $20. But if you are wanting to apply for something, you need to know what your real FICO score is. So it may be worth you, if I don't like anyone paying fees, but it may be worth you to go online and pay a fee to get your real scoring information. If you go to apply at a bank, they're going to give your score. Or if you have recently applied with the bank, that's going to be your FICO. Many credit card companies now have switched to sharing FICO information, and it will say FICO score. Trust me, they want to use that word. So if they are giving your FICO, you can see that. But Bethany, I love that you do look at Credit Karma because you can see your two reports. You can see TransUnion and Equifax. And if it says you're in an upward trajectory with your credit, when it shows how how you're pacing, that's probably correct. Your credit probably is improving. Just the score they're giving you might not be 100% correct. I have not seen where it has been correct in the banking industry. So just keep that in mind.
Okay, so it sounds like for like general purposes, like kind of to keep a pulse on it, maybe that's good. But if you're looking to make like a major purchase, and wanting to know like for sure where your score falls, then that's when you might want to seek out that actual FICO number.
Absolutely. Absolutely.
And I know I jumped ahead a minute ago, ask you a question, and then I see here on this next slide that it kind of talks about how your credit score is determined. And I think that's some really key information because when I was young, after I graduated high school, I remember getting my first credit card and I had no idea. I mean, I had a credit line of maybe 500 bucks and it was like, woohoo, let's go out to eat, let's go shopping. And that credit limit went like that, and then I was getting the bills and paying those minimum payments, and it seemed like the balance was never going down.
Well, you know what, Bethany? Welcome to the story of almost every college student out there that probably has gone through that. I remember being at games and it was cold. And I would apply for a credit card to get a blanket, not even caring that's probably going to hit my score. And what am I going to do with this card when I get it? Do I even know how to use it wisely? So, absolutely. So, having that credit card, though, do you still have that credit card, Bethany?
I do not. I closed it because I kind of went like after it took me so long to pay it off, I was like, nope, not using credit anymore. And I went years without a credit card. And then that actually came back to bite me. So I'm so glad we're having this conversation now so other people can learn from my mistakes. And I'm sure mistakes others have made, because it took me a while to,
Absolutely.
yeah, to understand like that there really is a purpose to credit and credit cards and building that score.
You're absolutely right. So let's talk about this. When you think about your credit score, I like to think of it as a big piece of pie or like a whole pie, right? So we'll do apple pie today. It sounds good on a it's warm here in Ohio. It's in the 70s today. It makes me think of cookouts and apple pie. So this is a credit score apple pie right now. So if you're going to cut the two biggest pieces of this pie and serve them to yourself or your loved one, your favorite person in the house, right? Then you're going to want to serve them payment history and debt to credit, or you could say amounts owed, but I call it debt to credit utilization. So what that is 35%. So those of you just listening in, the two biggest components of your score are those two things. Payment history is 35% and amounts owed compared to your limits is 30%. So 65% of your entire score are wrapped up in those two things. So thinking about payment history, so what Bethany shared there, whenever our card closes out, okay, with her, she probably didn't have it as long as beginning in her, career in her life. It doesn't have as big of an impact now because she has an established credit profile. But if you have credit cards, and that's the only credit card she had had for a long time, closing that out could have been a way bigger, larger impact to her credit score. So if you have cards you've had with that length of history, with that payment history tied to it, right? Make sure you're paying it on time. Don't be 30 days late. And if you have that payment history and now that card is closing, that's going to absolutely impact that portion of your score. Same when it goes to amounts owed. So a lot of people don't realize this. When you think about how you're using the credit available to you, how are you pacing on that? Are you close to your limits? Maybe so. You want to pay those down because the ideal amount is to be at 30% utilization of the credit available to you. Okay. So if you have, let's say that you have $10,000 across the board in credit cards available to you, that's your available limits, and you average around 5,000. So you're at 50%. It's not ideal. I'd like for you to be at 30, but 50% is not bad, right? You're using half of the credit available to you, but now you have a card close out. Okay, so now you had a card close out. So now you have $8,000 available to you and you're averaging that five. You just close that window and you're going to notice your score go down because now you're utilizing most of the credit available to you. So a lot of people ask me, what if I get a credit card increase? Is that okay? If you're disciplined and the credit card company increases your credit line, that could help your score. But if you're not disciplined, and if that is something on your mind that you're needing that because you are utilizing that credit available to you, I would not personally, even if my score was at stake here, I would not increase my credit line because I don't want to give myself more spending power if I'm not disciplined. So let's just be very transparent here. A credit card can be your friend, it can be your enemy. Bethany experienced where it did not make her feel good. It was not helping her, right? Because they do not send credit cards with instructions, directions on how to use it. They want you to use it frivolously. They want you to pay the only minimum payment because they want to make money off of you. But guess what? I don't want them to make one dime off of you. I want you to use a credit card to benefit you and help your score. So the good thing about a credit card, okay, is it is a revolving line of credit. It never has an end date unless you close that card or the lender closes that card. So you can have a very healthy credit profile with that history, right? You can have a card for 20 years. I have a friend that's had a credit card for 30 years. She got her very first credit card out of college and still has it to this day. I can't say I have mine. Okay, so but she still has hers. That's very rare because even when you pay off a loan, so Bethany, I have a question for you. If you've paid off a loan, what happened to your credit score when you paid off a loan? What happened?
It went down.
And it should be the opposite. You should get 50 bonus points for paying a loan, especially paying it off early. But that's not how credit works because now all that hard earned, all that hard work you did for whatever term it was 48 months, 72 months, all that hard work, you pay that last payment. It's now a closed file. So, yes, it still looks good on your credit because you paid it, right? But now it's not consistently reporting. That's where a credit card it can, I know, be your friend as long as you're paying them on time, understand how a credit card works. If you're going to charge it, make sure you have the money to pay it. And I will share a tip with you what I do. So when I do my banking, and all of you listening today, you can reach out to me because you're part of the Lighthouse Cove family if you're listening to this. So you get a free simple checking account. So you can have as many as you want and set up envelopes. So every time I swipe my credit card, let's say I spend $50 at the grocery, I transfer $50 to my online digital envelope. The reason I do that, I want to get it. I want the benefits of the credit card. I want to build credit. I want the points. I want the reward points, right? And the security against fraud, right? But I don't want that stress of thinking, this is piling up month over month, right? I take that out of my account immediately. Just because I'm in the financial business does not mean I'm perfect. I am human and this takes effort. I transfer to that credit card envelope. So when my bill comes, I can pay it in full. That's how I use my credit card to be my friend. And even those out there who do feel like they're struggling with a higher balance on your cards, make a plan, go for your smallest limit first, put all your energy towards paying that down. You'll start to get that psychological win that you see the credit card going down, you see your credit going up, okay? Because that portion of your score, if you pay your credit cards down to 30%, you will see a boost in your credit score, okay, by paying that down. And that gives you momentum to keep going. It makes you feel good instead of taking this pool of money and applying all these different places. You're not really seeing anything happen, right? So apply, go towards your smallest debt, pay your minimum payment on everything else. Put all your attention on that smallest debt. It's called the snowball method, and then go from there. Do what works for you, but I've noticed when doing this, that is the one that people seem to be able to stick with, is by doing it that way. You also see here, if you're, watching or listening in, 15% of your score is length of history, 10% is a mix, and recent credit applications is also 10%. So those have little factors in there. It's all important, but the two biggest ones is that payment history and amounts owed. So if you've had an older card out there and you've not used it for a while, my husband and I just had this conversation. Actually, he had a card that was going to close out, and now we've been using it. They can auto close between 1 to 3 years. And when you have an account close out, you could see a 50-point dip sometimes in your credit score, depending on how long you had that card. But let's say, Bethany, you opened up a Lowe's charge to do a home improvement. You used it for that one little project. You've not really had much activity. If you close that Lowe's card, it's not going to have as big of an impact on your score as if you closed a card that you had for quite a few years that you use on a regular basis. So hopefully
Yeah,
that helps answer your question a little bit, Bethany.
Yeah, and I think, you kinda hit on it too. I had a credit card, just recently, probably within the last 6 months, that I just hadn't used.
Mhm.
I didn't have any need for it, but I liked that it added to the amount of credit I had available to myself, and I didn't close it, but the bank actually closed it. And so it was just something I hadn't been paying attention to, so now I'm trying to pay attention and use my credit cards every once in a while, if it's one that's kinda more inactive, that way it doesn't get closed, and then that, reflects on my credit.
That's very smart. So those of you listening to this class, review your credit. That's something that we do for you as well. Because when you look at your credit and you don't know, this is not your specialty, you don't know what you're looking at, you can reach out to my colleague, Linda, and I. I will share information in the show notes. And at the end of this, there'll be a slide. You can reach out and we can review the credit with you. Even if you're located in Illinois or Kentucky, we do a lot of things virtually. So don't feel like that you're alone out there because you're absolutely not. Going back to the credit reporting agencies, so we mentioned these before: Experian, TransUnion, and Equifax. So again, Credit Karma is going to give you access to two of the three. So what I always suggest individuals do is go to annualcreditreport.com. So it's HTTPS annualcreditreport.com. gives you access to all three of these credit bureaus for free and does not impact your score. It will not give your scoring information, but does give your credit reports. There is major reasons why you want to look at your credit reports. You want to make sure that those accounts are yours, they're reporting correctly, and that you don't have fraud on there. So if you see something called an inquiry, sometimes they can be on the last page of the credit report, sometimes on the first, they're all different. But if you're seeing inquiries on your credit and you didn't apply for anything, that is a red flag that maybe someone has access to your information. So going back to COVID, which I would like to look back at those days, but going back to the COVID days, I got a letter in the mail from unemployment benefits saying that someone had applied for unemployment benefits in my name. I just got off work that day, so it wasn't me. I was not applying for any, but the thing that was scary is that they had my social. After I received that letter, I started getting bank accounts that were opened up, and it always would be on a weekend when I couldn't reach out to anyone, and I was starting to panic. So what you can do with all these breaches that we've had out there, okay, and if you and think about it, how often are you applying for things really? You're not. So I would highly recommend that you freeze your credit. It is free to do. You can log on to Experian, log on to TransUnion, log on to Equifax. You do have to log into each separately, okay, and freeze your credit. What that means is your credit can still fluctuate. Okay. So if you're at an 800, you're not going to be frozen at an 800. If you max out your card, your score is going to go down, right? Unfortunately, it doesn't freeze your scores in that way. But what happens is if anyone were to apply for anything, it's going to come back immediately. This credit report is frozen, cannot pull the credit. So that protects you from individuals opening up things in your name. My credit's been frozen, like I said, since COVID. My husband and I built a house a couple years ago. I just easily went on. I unfroze them. I could do it for 24 hours if I wanted, and the freeze automatically gets reapplied after that time. So I highly suggest that you do that. And I highly suggest you look at annualcreditreport.com to make sure everything is reporting correctly. I had a friend of mine who went to buy a home and they're like, well, you can't get approved because you have a house in foreclosure in Florida. And guess what? That was not her house. Because she had a name and social similar to someone else, she got tagged with it on her credit. So making sure that you review all three. And again, Bethany, I highly suggest you do this as well because not all lenders report to all three credit bureaus. It actually costs money for a lender to report your information to the credit bureau. So sometimes they just report to one, the one that's most local to them because it's more cost effective. So it's always a good rule of thumb or a good practice to go to annualcreditreport.com. You can go once a year or you can quarterly go in. You can check Experian and then check TransUnion. Just make sure you check all three throughout the year. I would also suggest you don't print the credit reports. I would just go to view. If you print them, you will use all your ink and paper because they are quite thick and quite lengthy. So I highly suggest you review those. And if you did want to meet with us, there's a secure way that we can get access to your credit report without you printing them. But this is a good measure. So get your score. So let's say that you do want to know what your score is. We kind of touched on this a little bit before, but you can go to Experian.com and get your Experian score. You can also go to TransUnion and Equifax in the same way. A lot of like Identity or some banks and credit cards share your scoring information. Again, if it says FICO, you can use that scoring information. But I have noticed that it's a little delayed. It seems to be a little bit behind. It might not be maybe it might be reflecting 30 days or so, but it should still be pretty close to where you sit today when it comes to your score. But I also want to share with you that within every score, get ready for this, there's 9 scoring models in every credit score. So what do I mean by that? If you go to apply for a cell phone, they're going to get a different score than if you go to apply for a home loan, which makes sense if you think about it. Getting a cell phone versus buying a home in a 30-year term, right, are different things. So if you go to apply for a house, they're probably going to get a much lower score than if you were to apply for a cell phone. So keeping that in mind, depending on what you're applying for, different scoring information will pop up. But if you are looking for a car loan or a credit card, you can be pretty secure with the score that you're getting on your FICO score. So again, things to look for in your credit report. We kind of touched on this, but look for typos, look for inaccurate information. And keep in mind, if you do find inaccurate information on your credit report, you can dispute these things. Let me tell you this, Even if there's a debt on there and it was you, I don't make the rules. You have a legal right to dispute anything on your credit report. Okay. When you make a dispute, they have 30 days to come up with your original signed paperwork showing you owe that debt. If they cannot provide that, they have to remove it off your credit like it never existed. There are companies out there that charge you money to do this. You can go on Credit Karma. You can reach out to Linda and I. We can coach you through how to do it. Do not pay for someone to do that for you when you easily can go on Credit Karma and do it for free. Any questions you have about this, Bethany? Any questions so far, Bethany?
I don't think so. I think I've been asking you as we've been going. This is what I'm
Okay,
interested in
perfect.
learning is, how if if you don't have credit, like what's the best way to go about establishing it? I have a 17-year-old, so, we've had some conversations. He has a bank account. He does some little odd jobs, mows the grass and stuff. So he's managing some money, but he's going into his senior year of high school. And I want him to be much better prepared than I was, when I graduated high school. So I guess for people that don't have credit and are looking to establish it, or maybe, they were like me back in the day and they made some credit mistakes, like how can they recover? How can they improve?
We'll go to the next slide. We're going to talk through it. Okay, so these are some key things you can do. And so, what I suggest for your son or for you to do for him, there's a couple things. So, if they're under 18, you can add them to your credit card as an authorized user. Okay, so that will help them have a strong score. So, when he turns 18 and he's trying to apply for things, his score will look good on paper. The only thing that could be a factor that could occur for him, is that credit history is technically yours and not his, being that credit card is not in his name. So, what I suggest him do as soon as he turns 18, Bethany, is there's something called a secured card. So you think about credit cards out there. Remember how we talked about how they can be your friend, okay? But I do want you to be a little bit picky about where you open a credit card. I personally don't do a lot of store cards. I'm more into a Visa or MasterCard, especially with a bank. So let's say you're thinking of First Financial Bank, right? You think of the different banks out there. A bank credit card will have more weight on your credit than any other type of credit card. What do I mean by that? It'll increase your score faster than you having one of these off-brand credit cards out there, one of these finance company credit cards out there. You need to get a credit card with your bank. Even if you don't bank with us, you can still get a First Financial credit card. They report differently in the way that you can walk into a bank and get a retirement account, a mortgage account, a checking and savings. So creditors look at them with a little bit more weight. But if you don't have a 660 or 670 credit score, you're going to have an issue getting approved for a bank credit card. So we have something called a secured card. So if you have no credit, or maybe you have a lower credit score, right? You're in that low range on the credit reporting. As long as you have income, you're babysitting, mowing lawns, any type of income come in, you can apply for a secured card. What it means is you put $300 minimum. You can put more than that into a savings account. We hold that money. We give you a credit line of $300 to spend. Okay. So that's how ours works. Ours is different than most banks, though. This is something really, really cool. We remember, Bethany, we talked about when things close out, how it impacts your score negatively. So you want that consistent payment history. How many other lenders do a secured card? Let's say that you've had that card for 2 years and you've had great on-time payments, or even you've had it for under 2 years and you want your deposit back. How many banks do it is they make you close that card to get your deposit, apply for a new card, and now you get a whole new account number. So you've just lost all that history you've had for 2 years with that secured card is now gone. That's not going to be good for your score. So how First Financial does it, we think about your future trajectory when we help you with the service. So we're going to do this for you. You have on-time payments. You've done great with that card. Okay. You've had it for 13, 14 months. We're going to give you that deposit back and flip your card to a non-secured card. Okay. So now you have that same account number. You got your deposit back, put it into savings, maybe buy yourself a little something. You've worked hard for it, right? But so make sure you do your research when you're out there and don't just open up a credit card anywhere. Do your research to make sure it helps. So secured card is a great way to build credit because now you've got a proof for a bank credit card. You're going to get that boost on your report every month. That is a very powerful way to build credit. We also have something called a credit achiever loan. So with this, you need none of your own money. We put money, let's say we put $1,000 in a savings account. We hold that for you. And let's say you pay a payment of $85 a month. Okay. We're reporting to the credit bureaus that you've got a loan that you're paying. And what you're doing is you're helping yourself have a savings and boosting your credit at the same time. So at the end of that term, you now have that $1,000 in savings that is your money that you now have access to. How cool is that? So please reach out if that's something that you need. My coworker Linda can help you with that. But here's a couple other tips too. paying your bills on time, right? Those credit building loans we talked about, keep an eye on your credit utilization. That was key, remember? 35%, 30 to 35% of your score are those two things, is your payment history and your credit utilization. So keep that in mind. Make small purchases and pay them off quickly. So get gas and pay the card off. Don't be so stuck on your limit. You can have a $300 limit and have a better credit score out there than someone that has $20,000 based on how you're using that card. And again, Bethany, add your son. I would add him if you think he's responsible and you want to add him as an authorized user. That'll help him get that strong score even before he turns 18.
Okay, sounds good.
So, tips to improve your score: make at least the minimum payment and avoid increasing your credit card debt. So, what many people do is they work very hard to pay down their credit card. And as soon as they have that money available to them, they're out there, they're maxing it out again. So, once you're starting to pay your card down, let it go, let it be, keep paying out and pretend it does not exist, but making sure that you're getting it paid down, especially to that 30%. Another thing is, be careful applying for things, especially if your score, if you don't really know what your FICO score is, because every time you apply for a loan, it can be 3 to 8 to 10 points against your score, and it can stay on your credit for around 2 to 3 years. So you don't want to apply for something that you don't know for sure you're going to get approved for, because now you're stuck with that hard inquiry for a couple years to your credit, and that can lower your score every time you're applying for something. So make sure it's purposeful and that you have a reason before you're just applying. Don't go applying for something to get a free blanket like I did back in the day. Don't make those mistakes. So how does credit affect your life? Okay, so in many jobs, look at your credit, right? So renting an apartment, employment, I had to make sure at my job they did a full background check on me, but they also checked my credit to make sure I'm responsible and paying my bills on time. Insurance pricing. Many people do not realize your car insurance premiums have a huge tie to that credit score. So the higher your score, the lower your premiums. And I don't know about you guys, but my car insurance premiums are going up. It is crazy. I had someone hit me and didn't have insurance. So it affected my insurance because I had to pay to get my car fixed. They just ran off, never found them. That was real fun. So I want to keep my credit good for many reasons, but I also want to try to keep my car insurance premiums down because I feel like I don't have much control over them these days. But even cell phone plans, a lot of things are tied to your credit. So the healthier your score is, even if you feel like you cannot get there, we have helped individuals in the 500s and helped them get to the 700s. I just heard a story today on a call this morning how a guy was at a zero credit score. And I want to say in a little over a year, he's at a 740. That is powerful.
Uh,
And that can be your story too. If you're willing to put in the work, you can do it.
wow.
So
So I
protecting your
know that.
score. So we talked a little bit. Oh, go ahead, Bethany.
Oh no, I was gonna say we did touch on protecting your credit score and identity theft, and looks like you've got a little more information for us here.
So yes, so there's a couple things you can do. Review your bank statements, shred receipts, right? Use secure passwords. So make sure, like, if it don't use the same password for everything. So, you know how I told you that my credit was leaked? My information now, I actually have a protection agency over my credit. So I actually have to pay to have my credit monitored because I'm a little scared now. But I even get alerts that my information is still being sold in the dark web. Makes me feel all warm and fuzzy inside. So I'm very alert to things. Even your bank account, you guys. There's something called skimming, and it happens every 2 seconds. So what many of these thieves do, you can go anywhere you use your debit card, the ATM, anywhere, they can skim your card. And what they normally do, sometimes you'll see a large purchase come out of your account, but sometimes it can be small amounts, under $1, maybe a little over, things that you won't notice. And they can keep doing this to you. So think, if they're doing this to 100,000 people and they're doing $1 to 100,000 people, that's quite the salary, right? That's quite the income they're making. So even if it's a small amount and it's not you, I want you to call your bank and freeze your card and investigate it more. Okay. So that, again, that means your information was leaked out there somewhere. If they got access to it, they can easily sell that information, and these individuals could take larger amounts. I don't want it to be where I remember teaching at a class one day, and the girl in the class said that when she left, like, she wished she took my class sooner, because a couple nights before that, she got off late at night from school, went to the gas station to get gas, and while she was in class, someone had drained her entire bank account. And so she's stuck at
Uh,
the gas station and had to call her parents because she had no way to get money. she had none. They took it all while she's in class because her card was skimmed. So this is why I always say have those envelopes set up, have a bank account that you don't use your debit card to where your money can be. It's called my mothership. That's what I call it, where it's just safe. And I transfer money out of that account into my different envelopes because I want to make sure that if that were to happen, I have that protection there. Another reason why using a credit card can also be a secure way to do your shopping as well.
All right. I know, we talked about different ways to improve your credit and kind of like that method for paying off your credit. I know that credit cards aren't the only thing that are reflected on, your credit report. I mean,
Mhm.
obviously, if you have a loan for a car, for a house, but also, aren't medical bills also reported to your credit?
So there has been so much talk about this. So everyone was like, "Oh, they're not going to count anymore." I wish that was the case. However, we did make some headway with this, not me, but in general, there's been some headway with this. So if you have a medical debt that is 500 is under 500, it will not be reported anymore. If it's 500 and over, it will be reported, but after they've given you a year to pay that. So if it's in default for up to a year, and you don't pay, you don't make any efforts to pay, then it will be reflected on your credit. If you've had any paid medical collections, those should be coming off and not being reported on your credit, not even showing up at all. But going forward, anything that's $500 or more will be reported to your credit if it's under that. So what happened is many people forgot that they had like a $50 copay that they didn't pay and they got a bill for it. And it's ruining individuals' credits over $50. So they decided to make a law where now if it's 500 or more, it will be reported. Anything under that, it will not be reported. So just making sure that you open your mail. I'm going to tell you, $500 when it comes to medical care, that's not that much. Like that could be one little visit for something. They look at something, look at your tooth, and it's boom, you get $500, right? So making sure that you are looking at your bills, that insurance did pay what you planned. Because many times we just don't open our mail. We think, oh, I have insurance, I'm fine. And now it's being reported to your credit, and we don't want to ruin your credit over something like that. So just making sure you're diligent. But there was some headway with that. Anything over 500 will be reported. But keep in mind, if you have any old debt on your credit that's around that 7 year mark, normally it starts to fall off your credit. So that's a way you can dispute to get it off. But another thing to keep in mind, if you have something approaching that 7 year mark, and let's say you're wanting to make a debt management plan and you're looking at your debts, the older debts at 7 years will fall off. However, if you pay $1 towards these debts, they start over for 7 years all over again. So I'm not saying to not pay your bills. What I'm saying is go for that more recent debt first. The other things will fall off. You can settle with them offline, but at least it won't be impacting your credit. So this is where it could come in handy just to meet with Linda or myself, put a plan together to see what is the best way for you to navigate your finances. If you have a pool of money, how can we make that the most powerful for you to get you to your financial goals?
I know that we have here, as
So
we're closing out, contact information for you and Linda.
yes. So, if anything today piqued your interest, you want to learn more, please reach out to myself or Linda. Our contact information is here. You can also scan this QR code. Just make sure you input our information, our name here. But if you're listening to this, you are a DSP, you are associated in that amazing field, Lighthouse Cove. You get some amazing benefits. You get access to cash bonus offers with our checking accounts. You get loan discounts. There's amazing opportunities for you, and you get access to these resources. It's like that MasterCard commercial that is priceless. You have a no judgment where you can reach out to someone. And we just want to empower you around your financial goals. Life is hard, right? Life is expensive. How can we make you thrive a little bit more in that space? You do so much for others. We would love to give back to you. So I would love to hear from you. Reach out if there's anything that you think that we can maybe help you with that's valuable to you. We would love to hear from you.
All right. Thank you so much, Susanna. And I know that we're not done. This is, episode 2 of the financial fitness series. And so there is going to be an episode 3, maybe 4 and 5. What's episode 3 going to cover?
Well, I'm thinking debt management. So we talked about budgeting, right? We talked about some credit. Now let's slash that debt. How can we get rid of debt? So we're going to look at ways and tips that maybe you can get rid of some of that debt, learn tools and resources that can help you avoid repeating those behaviors, right? They get comfortable. We're just so used to swiping that card. So I think debt management will be the next topic. And I can't wait for you to be listening in here in the next month or so.
All right. Again, thank you so much. Thank you to everyone for tuning in to this edition of the Direct Line by Lighthouse Cove. We will see you again soon. Goodbye.
Bye, everyone.
With the launch of Lighthouse Cove, our work continues with the growing and renewed direction of our podcast, The Direct Line. With conversations, stories, and on-location interviews, The Direct Line supports the mission of Lighthouse Cove to educate, elevate, and empower professionals across the IDD field. Tune in to the Direct Line podcast, brought to you by Lighthouse Cove every Thursday on YouTube and all other podcast platforms. Lighthouse Cove, it's more than a name. It's who we are.